Everybody, I'm Raymond Dahlman, and this is the weekly wrap-up for July 9th, 2021. I hope everyone had a terrific week. It's a little warm here on the Front Range of Colorado. Yesterday and today, we had temperatures approaching 90, which is unpleasant. But other than that, it's been a beautiful week up here, and hope everyone's had a good short week at work. And again, I hope if anyone did have any fireworks mishaps, they were minor, and hopefully everyone out there still has all their fingers. So, but first time here, be sure to like, subscribe, and share with friends and family. And let's go ahead and dive into the news for the day, or of the week. All right, Wall Street closed at a record high, which is certainly good news. Let's see here. Here's the actual news part of it. Yeah, all three major indexes averaged or notched record closes on Friday after a sell-off the day before, prompting fears of slowing growth and worries that the new COVID-19 variants could stall the global economic recovery. Investors' attention now turned to Q2 earnings season and kick off the next week. So that's pretty good. The middle of the week, things were a little rocky, and I'll get into that in a minute. But all in all, we keep setting new highs in the stock market. I think most of us understand that that's due to a lot of the dollar creation and inflation. But we'll ride this wave as far as it goes and see what happens. So the Fed sees shortages and hiring weighing. We've talked a lot about that over the last couple of months. As long as you're incentivizing those to stay at home, you're going to have a hard time filling those jobs. So the 10-year Treasury yield bounces back. It rose 7 basis points up to 1.36 on Friday after being as low as 1.25. What that tells us is that if the 10-year, the yields are rising, that means people are selling off their bonds and moving their money elsewhere. Looking at the stock market, you can kind of tell where it went. There was, the concern with bond yields that had been, falling for the last few weeks was that, the stock market rally was coming to a close, and it was time to rotate more to a bond position. So, again, we'll see. I've been tracking the trend of the holdings that I'm employing. And they haven't broken the long-term trend yet since like mid last year. So we'll see where it goes. Let's see, Canadian gold shines for a third week. Yeah, gold was up over $1,800 an ounce. So good news. All right, well, let's go ahead and excuse me. Look at the let's go ahead and look at the market first. Let me bring up my charts here. The Dow Jones for the week looks like it was up slightly, up 0.23, but we were down quite a bit, midweek. So from the low midweek through today, through the close of today, or I guess low yesterday morning, we're up 1.88%. So all in all, the Dow finished pretty well. Let's look at the S&P. It was up 0.34. Again, kind of a very similar chart. Dow Utilities, the chart looks a lot more smooth. It was up 107. And let's see, Dow Transports. Transports were down, probably due to energy prices being, going up. It's down 1.43%. And the NASDAQ, again, kind of a choppy chart, but up 0.63 for the week. Looking at gold, gold was up quite a bit this week, 1.09%. Silver, not as good. So it was down 1.31. And then the cryptos, Bitcoin, is around 33,000 right now. So all in all, like I said, not a terrible week in the markets. It's always good to finish on an up note. And so let's go ahead and get into the economic data. Initial jobless claims came in at 373,000. Forecast was 350, so slightly above. The previous week was 371. The actual number was 360. The 364 last week was revised up to 371. So, but still below the forecast of 390. So, look for some silver linings. Continuing jobless claims came in at 3.339. So 3.3 million-ish right now. So again, that trend line does continue to trend in a positive or a good direction. So the last week's came in at 3.469, was revised up to 3.484, putting it just well, I'm sorry, still came above forecast. So. But again, looking at the longer-term trend, if we zoom out a little bit and look, where we were in March, we had 4.12 million continuing their benefits, and now we're down to under 3.5. So again, positive. I hate always being negative and pointing out the most negative things that are going on. So this is certainly some good news. All right. Energy prices, I know I've been talking a lot about that in meetings right now, and right now crude oil, this is I believe West Texas International closed at $74.63. But if we go to the chart, again, certainly not the highest. We've seen $140 oil we had back in 2008, and then through from, what was that, 2011 through 2014, we had some pretty expensive oil prices. So, but since then, this is as high as it's been, really in the last 5 years. So, we'll see. Some of that has to do. Let's go over here to the rig count from Baker Hughes. Right now, the current rig count is 378. And you can see here on the chart, going back the last, was this 5 years, I think? Yeah. We had this significant drop from, the 7s and 600s down to, under 200 rigs out there. So, the reason for that, obviously, was the dramatic, stoppage of, driving and flying, and all the consumption went down. So, obviously, oil companies and drillers have, if they're not making money, they're going to, halt production for a short bit. So that's what we're seeing. So from a low of around 172-ish, we're back up to just under 400. So give it a little more time. A couple more months. We should be up in the 500 to 600 range. And we should see some easing on gas prices. Obviously, it's summertime. People are driving more. The rigs haven't caught back up with production. So my, guesstimate on what's going to happen down the road, as, the rigs come back online, they keep, they're pumping more oil to refine, and, prices will come down because the supply is higher. So, all right. And then the last chart I wanted to look at was, the ISM Non-Manufacturing Purchases Managers Index came in, not hugely below forecast, but that's it is a significant distance. So what is the ISM? Let me go ahead and just read this to you because it'll explain it better than I can try. The Institute of Supply Management Non-Manufacturing Purchasing Managers Index (PMI), also known as the ISM Services PMI, report on business. A composite is a report on business. A composite index is calculated as an indicator of the overall economic condition of the non-manufacturing sector. The NMI is a composite index based upon the diffusion indexes of 4 of the indicators of equal weights: business activity, seasonally adjusted; new orders, seasonally adjusted; employment, same; and supplier deliveries. So those 4 things are put into a matrix, comes up with a number, and basically if the number's over 50, it's assumed that the economy is expanding, and if it's below, there's contraction. So where we're at right now is right around 60. We were expecting a number up around 63.5, closer to where we were on the actual number last month at 64. So there was an expectation that there was going to be a pullback from last year's number, or not last year, last month's number, but obviously someone miscalculated something there. So, but looking at the bigger picture, it hasn't been below 50 other than right at the beginning of all this craziness last year. So, I mean that's the good news. Let's go ahead and scroll back out here for over a couple decades, and you can see it is improving. Obviously, it is up over 50, and looking back at the other chart, we're headed back in the right direction longer term. So, all right, well that's everything I had. Didn't want to take up too much of your time. It was a short week, and we've had some wild things going on this week. We've had hurricane or tropical storm come across Florida. Affected actually both my kids. The older one in Jacksonville and the younger one up in Kings Bay, Georgia. So both of them seems to have come through unscathed, and a little mess at the base at Kings Bay. A tornado came through and ripped up, I guess they had either an RV park or maybe a mobile home park on the base, and it got it got clobbered. So don't mean to laugh, it's not funny. So but news reports everybody was all right. So that is good news. We're headed into another summer weekend. Get outside, get some exercise, get some sun, do something fun. And if you need anything from me, just reach out. I'm always available. And I do have a pretty busy week with meetings next week, but if anyone needs anything pressing, I should be able to fit things in, or whatever. So, but like I said, have a great weekend, and I'll talk to everyone on Monday. Have a good one. Bye.